Okay. Great. Well, good morning, everyone, and welcome to the Singapore FinTech Festival. Wow, it's nice to have all of you here. And I'm Pete Carter. I'm with the National University of Singapore School of Computing and the director for the FinTech Lab and associate professor there. And I'm joined by Chaiju and Shashank. So the Talent Pavilion is part of the FinTech Festival. And this is the part where you really get to learn more about why be in FinTech, what it's all about, and so forth. I see a number of friends here from the FinTech, NUS FinTech SG program. So a big shout out to all of you. Thanks for coming in. And for those of you who aren't familiar with that, we'll share more at the end of the session. But Shashank, some of you, even if you're part of the program, haven't necessarily met Shashank yet. So I will introduce him too. Shashank is a dear friend and certainly a person I go to for investment advice. He has been doing trading for many, many years, maybe longer than I've been alive, Shashank. Okay, well, and certainly, he's come from a very variety of backgrounds. He was an engineer. He got to fly on helicopters out to oil rigs and help make sure that the money was coming out of the ground. I mean, oil was coming out of the ground. And then he decided to switch into this technology field. And we met, and he was the most brilliant master's student that I had ever met. We had a stock market game in his class, and he won hands down. And we did data visualization, and he beat everyone. So that was really great. And for the past several years, I've had the pleasure of working with him together in the FinTech Lab. And now he is a lecturer in our School of Computing. So really glad to see Shashank here sharing with you. He also teaches the algorithmic trading class. And if you know anything about algo trading, it's about taking your heart and your feelings out of it and just getting right to the numbers. But Shashank, I don't know why you need the algo trading. You already are a cool operator in the trading space. So everyone come in. I'm glad you'll get a chance to listen to Shashank as he shares the key tips of the trade. Chaiju is joining him, and toward the end of this, Chaiju will share some of what he's learned. He's sat through Shashank's class and several of his classes, right? And also had put together a whole system as well. So I was really proud to see what Chaiju had put together. And he is an experienced entrepreneur, more than 34 years of serial entrepreneurship, businesses, and doing trading. But in terms of trading, import, export, not necessarily the stock market, and certainly not algo, but now he's doing that too. And I love it. It's great. So look forward to hearing him read back to you some of the things that he learned from Shashank. So with that, welcome again. And Shashank, I turn it over to you.
Thank you. Thank you so much, Prof, for this nice introduction. I hope your investments grow, since it is subject to, okay, we will talk about that later. But first of all, a very good morning to all of you. Thank you for joining here. Now, let me share my screen so that I can start immediately. And let me know if you can see my screen here. You can see, right?
I can see it.
Okay.
Yep.
Okay. So I know this is a 1-hour talk, and I will try to cover the fundamentals, which are very, very important for you guys to understand, especially if you are very new to investing in algo trading. Okay. And later after my talk, I will hand over to Chaiju, where he will present to you what he has done and what you can also do in order to get benefited from the algo trading and these principles. So in this talk, I will basically cover what is the key to success in investing, right? And you will be glad to hear that it is not a rocket science. And then I will talk about risk compatibility, investment pyramid, like how you plan your investments before investing even a single penny in the markets, right? And then some of the data and technology sources I will introduce you, which you can have a look at, which you can go into more detail to get enhanced in your investment decision. And then the algo trading project demonstration by Chaiju. Now, let me start with this news. I don't know if some of you might have heard or some of you don't, but this was published in around last June, OCBC survey, which says that 2 in 3 working Singaporeans do not have savings to last them beyond 6 months. Right now, if you have trust in OCBC, if you trust in Straits Time, you have to trust in this. And if this is true, this is very alarming, right? This is a very high time for us to realize that wealth management is so important. Now, many of us know, but we don't care. We don't have the time to look into it, right? So we are so stuck up in our regular jobs that we do not pay attention to this, because 2 in 3 is a very high number, right? So, and I have put water here for the analogy that as water is important for life, wealth and proper wealth management is very important for a secured financial life, right? So you have to realize that this is important and you have to start taking action. Let me give you an example of Warren Buffett, right? So Warren Buffett bought his first stock at age of 11, started very early. And his returns are not very crazy. His returns are merely 10 to 20%. Even now he earns up to around 22 or 23%, right? And previous times it was 6. But he is one of the most successful investors. So you need to understand that when you start early, the power of compounding comes to you. You have to have discipline in your investing philosophy. And then with these small returns also, you can be a very successful investor, right? So this is the point, that start early, be consistent, and be disciplined. Now, how early is early, correct? That doesn't matter. And the point here is, no matter at whatever stage of life you are in, you should start taking action as soon as possible. It's never too late to start. Okay. So this was my first point, that you have to realize that this is important. Now, what it takes to be successful, and to achieve your goals is at first place knowledge. Now, if you joined here thinking that there could be some shortcut I would be giving, I'm so sorry for that. There is no shortcut in investing. You have to understand, you have to gain knowledge about the financial instruments. Like if I talk about Singapore Airlines, or if I talk about DBS, if I talk about Apple, why you are going to invest in those stocks, what they do, what could be the outcome, what are the risks they are providing, and what risks you take. You have to understand whether it is a genuine opportunity or is it just a Ponzi scheme, like in many cryptocurrencies. Now, I'm a fan of cryptocurrencies, but some are really a different scheme. So you need to pay a little bit of attention to that, dig in a little bit. Some time will be taken there to understand the instrument. And once you plan, you need to also test your strategies, that whether it is making sense, how back you have gone and tested it. Suppose if I see something happening today, whether it has been successful in the past, will it make in the future, you need to understand that. And the important point from here is you have to invest only in what you understand. And most people do this mistake, right? Because of the greed and fear and emotions coming into picture, they go into anything which they don't understand. Now, Warren Buffett doesn't invest in cryptocurrency. I don't know if he doesn't understand or it is too risky. But my point is, you have to have knowledge about that instrument, whatever you are going to trade. Once you have that knowledge, you also have to have supervision, because this is important. Even you buy or you go invest into some stock, you forget it, right? And then there is no timely exit. You don't know when to get out of the market. Even if I talk about your personal savings, credit card expenses, how many of us really go back and see what has happened? Nobody cares about that, right? But in investing, you have to look back and you have to look at the present, that what is happening. There are lessons you can learn from it, right? Many times we have a belief, and unlearning is very difficult than learning. If you come with a preconceived idea in investing, that could be dangerous. So you have to look back, see what's happened, where you are going right, where you're going good, and then improvise and improve, right? And the third point, after knowledge, even if you have good amount of knowledge, you are supervising, but if you lack in discipline, investing can be dangerous. So what you do here, because see, we all are humans and the way we think is very different, right? No matter how much knowledge or supervision you do, there comes a time where you are trapped under the emotions of greed and fear. Whether should I invest more? Should I stay in the position? Should I get out? Right? So you keep that money into mind and then you make irrational decisions. So that discipline is very important. And based on that, you have to change and improvise further. You need to improve based on your life situation, whether that amount of capital is required or not, right? So before entering into any position, you have to make sure when you are getting out, what you will do if the stock price reaches to a certain level or it drops to a certain level, right? So these are things which you need to learn. And if you have knowledge, supervision, and discipline, trust me, you can be very good at your investing skills. And that's why you might have heard people like who are more disciplined are a very good investor rather than just risky people, right? So please take a note of all this. Now, just an example here, turtle trading. Anyone has heard about turtle trading? Okay. Chakong has heard about it. Okay, so turtle trading, very good. Turtle trading back in 1980s, I think 83 or 84. What they do, they made a full plan, and they said that we can make anyone a good trader, right? You have to just follow the plan, follow the rules, right? And there was a strategy which was about trend following, and there were some rules. And many people followed that and were successful. So that was a very good, successful strategy back then. No knowledge of investing, no preconceived idea, just follow the rules. So this is just an example. You can explore more on turtle trading if you want. I will just quickly move ahead. Now, here I have two portfolios, right? Portfolio A and portfolio B. This blue is a portfolio which is going very volatile. In the 8th month, it was also negative. Then ultimately in the 12 months, it has given me 20% return, right? Whereas this portfolio B, which is the red one, going very smooth, but it gives me only 10% return. Now, if you have to invest for the future, which portfolio will you choose? Portfolio A or B? Now, unfortunately, here we don't have the poll, so I can't raise a poll here. But what you can do is you can raise a, okay, you are writing in the chat. Okay, so here a notion is just remember what you have chosen, okay, because I will come to this slide later. Okay, and there is no right or wrong answer in this. You can choose. I see most of them are choosing. Hey, very good. Let's see. Now see, financial markets are made up of several items, right? Several items, several instruments. Stocks are the very famous one. Then you have Forex, commodities, ETF, fixed income, derivatives, and the latest addition, which are the cryptocurrencies. You need to understand that why you need to trade stocks and why not cryptos, or vice versa. If everyone is trading cryptocurrency, you do not need to trade cryptocurrency. You can be happy with stocks and Forex. And when and how that will be possible is if you understand this graph. Now, this is not to scale. This is just for understanding purpose, right? Like The bonds, if I talk about bonds, they give you very little returns, but they are also very little risky, right? So the risk exposure of bonds is very less, but yes, returns is also less. Then you move into a stock. You take little bit more risk, but then you expect more returns. You go on into Forex, you go into commodities, and then ultimately you go into cryptocurrencies or your friend's business. My friend's business is a new venture which has not been established yet, right? So you see what is happening. As I move on, the risk here is increasing, and hence my expected return is also increasing, but it is not guaranteed. If the crypto goes down, you will lose that much more amount of money as well. So now you understand here that what are the risk profile of the instruments they are providing, and how you get it is by understanding the volatility. Now, volatility is some mathematical calculation which you can get very easily in Excel, which is nothing but it says that how much individual values or the individual returns in a series deviate from its average return. And so you need to calculate that, and you can easily get this graph. And it could be for the stocks, for the cryptos, you can make your own scale of this. And then you understand that, okay, this is stock, this much risky, this is stock, this risk, this crypto, this risk. You understand the market now. Then you move to understanding yourself. And this is very important. We do not know ourselves. Sounds crazy, right? But it is the truth. If I gave you real money, people who chose A in the chat will put money in the B. And people who chose B will put money in the A. And studies have shown that people have a very wrong perception of their risk tolerance. See, ultimately, my point here is you should only invest in risky assets if you are okay to lose, right? So what happens when the real money comes? Greed, fear comes, and your decision making becomes irrational. So here is a website, CalcXML. You can go to that and you can explore. There are so many calculators. They ask you some basic general questions and they tell you about what is your risk appetite. Many people know. It's okay. If you know, that's fine. So you can tell that, okay, I'm a low risk person or a moderate or a high risk person. If you are a high risk person, then yes, go back to the risk reward graph and select instruments which you are okay with. If you are a low risk, then moving beyond this stock ABC is pointless. Because a good investment is an investment which lets you sleep peacefully in the night, right? If your investments are bothering you, that means that is not the right choice of instruments you have picked, right? So that is very important. So the whole point was understand the risk of the instrument, understand what you are capable of, and then there is a match. Then you choose your instruments, and then you make your portfolio. Now, how you make your portfolio is looking at the pyramid. At the base level, there should be always protection. Now, this was missing when I showed you the graph 2 in 3 Singaporeans. This base was missing. This is the base. Many of us, first let me tell you what this is. At the base level, I should have a protection, meaning what I have, I should invest is in a very low risk investments, right? So what it is, I should have cash, I should have emergency funds for at least 1 year. Maybe if I lose my job, how many days or how many months or years I can survive? You have to protect. Now, where you can invest is safer investments, CPF, term deposits, fixed deposits, insurance for all the family members. Have you made your base strong? Have you made your base strong is the question. Once your base is strong, then only you move to the markets. Because see, money at markets is money at risk, right? So then you go for accumulation. What is accumulation? Is you take some risk in expectation of higher rewards, but it should be objective based, always objective based. randomly picking stocks and investing in market should not be the case. Most of us, what we do, we just invest in market, but we don't know the purpose of it. So for example, if you're unmarried, maybe you are planning to get married, so you need funds there. If you're married, you have kids, for kids education, for your retirement, maybe you need to buy a car or any such event which is obvious to come in future. You have to invest in those. Right? Why? Because the time duration is different. Your kids' education, your retirement, they're all coming at different time horizon. If the time horizon is different, your stock picking will be different, right? So plan accordingly. And then you go for stock markets here. And ultimately, which most of us miss, is this risk part. Whatever is your risk appetite, you need to invest a little portion into risk. Because what happens if you are a risky person, but you are not taking risky investments, you are losing on that. You are not making money. You are losing the opportunities. On the other hand, if you are not a risky person and taking higher risk and those investments don't do good, you are losing your sleep again, right? And as I said, you have to sleep peacefully. That's what the whole motive is. And then you plan, and then you put your money into it. How much into protection, then accumulation, and this. And then once we do, we are doing a planned investment. This can be very different for all of us. Not necessarily you only put in, you can just go for accumulation and make 3 levels here: high risk, low risk, medium risk. You can do that as well. But the point is, when you do this, you are now a planned investor rather than a random investor. And then once it is there, every frequently, weekly, monthly, or annually, you rebalance. If risk is lower, then put some money from accumulation to risk. If risk is higher, then put some back, and just keep on rebalancing it so that you know what is your risk appetite, what is your risk exposure at time T, and then you are always exposed to same amount of risk. That is the whole point of investment pyramid. And allocation, of course, will depend on your risk appetite. Maybe for me, I'm putting, suppose I got $100, maybe I put $45 in protection, 45 in stock market, and $10 in cryptos. To me, if you are okay, you can put $20, $50, and then $10, according to you, right? But make sure you plan it. Now, as I said, it could be also difficult, right? As easily said, because it is all the problem of hypothalamus. What is hypothalamus? Okay, I will come to it later, since I think the time is running out, so I will just move with this. Okay. Now, if I give you a scenario, there are 2 lottery tickets. In one scenario, that lottery gives you surety of winning $900, right? If you pick that ticket, you will win $900 for sure. There's another scenario where it says there's 90% chance of winning 1,000, but 10% anything can happen. 90% chance of winning 1,000, and lottery A says 900 for sure. Then what will you choose? Do you see reactions in your Zoom reactions? If you can see yes and no, for A you can put a tick, for B you can put a cross. I don't know if you can see reactions there. Yeah, because this gives me a count. Very good. So a tick for A and cross for B. Okay, I can see. Very good. Yes. So you see 16 ticks and 4 crosses. I'm just stopping it here, but I know the point is more or on the A side, right? Like you will do, of course, go for 900 for sure. Then now tell me, what happened to the people who chose the risky portfolio in there back in the slide 1, right? You chose the volatile one. Then you were taking the risk, but now you are going to be sure. To add more to it, let me clear this. How I can clear the reactions. Okay. You will vote, then it can change, right? Now let me give you another scenario. There are two tickets again. On one says you will lose 900 for sure. Okay. And there is lottery B or ticket B, which says there is a 90% chance of losing 1,000. You can lose 1,000, 90% chance, but 10% of course cannot. In this case, what you will do? In this case, what you will do? Which ticket you will choose? Can you do again? Okay, you will do nothing, but you have to do something. Benjamin, that was nice, but you have to do something.
Is it still tick for A, cross for B?
Yes, the same. Yeah, green tick for A and cross for B. Now you see the numbers 5 and 14. The number got changed. And as the number gets changed, this is a very important point. You have to understand this. See, now what you are doing. When it comes to losses, you are taking chances. You are going for a chance where there is a probability of 90% losing 1,000. 10%, anything can happen. But now you are going to take chances when it was losing. When it was winning, you settled for 900. You didn't take a chance to make $1,000. Right? Yes. And this is a very important point because this is how the mind works. And if you are not an algo trader, then you are stuck in here. And you don't realize this. You never realize that this is happening. But this is the reality, what happens, right? That's why there are so many biases. And I can't go through because this is a very short time here. But just to make a summary here is there are various biases which investors do not even know that they are going through. That's why it is important to make rules, stick to it, and then do your investment decisions, right? And there comes the benefit of algo trading. So the systematic trading, of course, has proven benefits over discretionary. Now, discretionary trading is something which is people take decision by their guts. And I don't say that they always lose. Yes, there are many traders who never do algo trading. They just look at the graph and make the decision. But they are very little, right? 1-2% maybe. If you have to be consistent, you need to make a plan. Not necessarily always algo trading, but the plan and systems are important, right? But if you are doing into algo trading, you are on the safer side. So here are some sources which are available, which you can through. Now, Yahoo Finance is a very good website, which will help you to get all the data which you really need and for free. TradingView is there where you can have all the paper trading you can do. They can tell you what the indicators are giving, the decisions and so on. Then there's automation platforms, UiPath, Zapier, Power Automate, and so on. When it comes to code, it's Google Colab, Quant Connect, which we use, and later Chaiju will introduce you and tell what he has done in there. And there are some other applications. Use Google Docs, Sheets, and other banking investing platforms. But use this to make better decisions, right? Going just plainly into website is very difficult. Now, this is about the Yahoo Finance. If you go to the Yahoo Finance, you can see that market cap 2.43, beta, P ratio, EPS. These gives you a very good summary of where the stock is going, and which will help you in decision making. Like beta is nothing but how much more volatile the stock is as compared to the market, right? So now when you pick your stocks, you see something rather than randomly picking. So you need to understand and then pick, but these are freely available to you. Benefit is you can also bring into coding, right? This is about the tradingview.com, which gives you some nice indicators. What I don't say you trust in this. This is not from buying and selling of the stock, but this is what an indicator is suggesting. It's up to you how you understand this, right? But you get all those values for free. So you do not have to calculate, but you can use this. So explore Yahoo, TradingView, and so on. That will be very good for you. You can do paper trades like this. So before investing in the real money, you're sure that yes, okay, this is my portfolio. This would have been happened if I would have invested. Right. So very nice tool, TradingView. These three I just wanted to introduce, which you can explore on your own. Now, very common analogy this is being given, right? Investing is like driving a car, where your front view is your fundamental analysis, where if you look at what is going to happen, what is the company management doing, what is the company's policies, and so on. Very important. Your rear view mirror is your technical analysis, where you see what has happened in the past. What are the ranges the stock can see, right? And your side view mirrors are your sentiments, your recent news, any unforeseen events, those come into picture. And you need to be very careful for fundamental, technical, and the recent news to drive safely, right? Now, as said easily, how you can achieve this is you need to learn to automate. Because if I have to get information from Yahoo, from sentiment, from Twitter, or say anything, any other websites, it becomes difficult for you to gather information. So what you need to do is, now this is a sample from UiPath, right? You can choose any software what you want. Power Automate is nice and others are nice. See, what it does is I have to just pick cards. Use Excel file is one card. I say that, okay, where my analysis will be. I insert some rows in there. I go to the URL. I then get a text from the URL, and then in the right cell, I write whatever I want to do. So if I have to make calculations, I will write here, and my Excel sheet will have all my dashboard ready. So before starting my day, right, this automation tool will run. It will pick whatever is necessary. It will pick whatever is my status now. And I have a clean dashboard that, okay, this portfolio is doing this stock is up, this stock is down, what action do I need to take, right? So that will be settled for you. And this is very important if you have to gather information from multiple places. And of course, this is no coding, which everyone can do. So we need to try to go more deep into this, right? Because that is how data and technology is coming into your better investment decision making. Another thing is which you can need to know is you need to learn to code, which is also not very, especially Python, very easy language as it comes to the investing or data management part, right? Because we are not going to learn whole Python. Python is a very big language, right? Huge. But we are sticking only for if I talk about algo trading, it is very basic. You need to just understand maybe half an hour of practice and you can do this. Like this is an example. I'm just importing a library, which is Yahoo Finance. Now this library gives me access to all those data, beta, alpha, gamma, everything which is available in Yahoo Finance. I make a data by calling a history. So I need a data of Apple and historical data of 1 year. And plainly, I'm calculating the returns is by data.close.pct change. I get the returns. With this returns, I can calculate the mean using a function .mean.std for standard deviation. And this is nothing but the risk which I was talking about. So this is a very basic example, and you can get all alpha, beta, Sharpe ratio returns, and so many financial ratios. You can get it through code with easy. You can loop it. You can get it for thousands of stocks, right? So it is just 1 minute of effort, not 1 minute. 1 minute is for running, but preparing maybe you will need, depending on your skill level as of now, maybe half an hour, 1 hour to make these simple workflows, and then you are good to go daily, right? At start of the day, you will be in a position to know where to invest, which stocks to cut off, which stocks to add on, and so on. Google Colab, no installations required. This is a web-based, you can do very easily, right? So getting back to what my point was here is, you have to gain information from multiple places, learn to how to automate, learn to how to code. These two are very important points which you need to understand. What you can do this is simply, you see there, like many times what happens, there is a signal, right? Now, if I do talk about buying moving averages and so on, I get a buy, then I get a sell signal, I get a buy signal. You can do automate your signals by that. And many a times signals may be there, but are they making really money? Are they making real money for you is very different. So what you do is you can do signal testing, which is getting signals when to buy, when to sell. From the coding, it can be easily done. You can see visually on the graph that, okay, this is the time to buy. Another concept is back testing. Now, based on those signals, you can go back into history, run your strategy, whatever your strategy was. A simple strategy, suppose today is Friday. Many times you have seen back in history that on Friday stock market go down. You are shorting the stock markets on Friday, but you never know whether it is true or false. So that you need back testing, right? So back testing is going back into the history and simulating your strategies to see whether it is making sense or no, or how much it is making. You can even back test for what is the right time for entry, what is the right time for exit, what should be your stop loss level, what should be your take profit levels, and so on. And this is what I generally teach in my algo trading class as well, which is, now I cannot go deep because this I take 3 days to teach. But this is the platform which I take, Quant Connect, very easy platform. You can explore Quant Connect, you can create free accounts, see. They have created lots of functions, so you do not need to get involved into coding too much, but very basic Python, and you can get, right? But algo trading and back testing are very important for you to have confidence. Now you know that, okay, this was my strategy, and I have also tested it. Now this gives me the confidence to put money for the future, right? And most of the traders don't have this facility available of back testing. So I think that Friday markets go down, and if I every Friday I short the market, maybe I will not make money. But if I have back tested it, I know that the probability of happening it, right? So this is about, I will end here. My talk, which was very crisp, coming to know that what is the key to success, which I told you about: knowledge, supervision, and discipline. You need to understand the instrument first, understand yourself, and make a match, and then only invest in those instruments. Remember, a good investing is that investing which lets you sleep peacefully at night. If you are worried about your investment, change your stocks. And you need to plan. Before putting a single penny into the market, plan what is your risk appetite, how much money you can put in risk, how much in the protection, how much in the accumulation, right? Test it by paper trading. TradingView I have introduced. You can go back in detail there, explore tradingview.com. There you can paper test your ideas, whether it is making sense or no. And then some of the sources I have told you, Google Colab and other automation tools, explore it as well to make sure. Right, but the point is, see, no matter what stage you are in, it's never too late to start. Although it will take some time, but of course you can't get anything just in a moment, right? It will take time, but you will get it. So please plan your investing journey as soon as possible. Think of it and realize it and manage it. Now, I will pass over to Shaiju. Let me stop sharing here. So thank you, everyone. Now Shaiju will take over and he will tell you what he has done with the Quant Connect platform, right? And he was also not very familiar with Quant Connect. I think it was also new. He was also new, and he has done a very great job in there. So handing over to you, Shaiju.
Thanks, Shashank. Thank you very much.
Thank you.
It's been a great journey learning everything from FinTech Lab and from you. Okay, I appreciate all the introductions. So now I don't have to intro too much about algo trading, but I still want to touch a little bit on it. So let me share screen. Hope you all can see my yeah. I put it up all into a business model that I'm hoping to commercialize. This is basically this to show introduction of how Quant Connect. But as Sheng has introduced, nothing comes for free. So you still have to go through the process. The process is the most important thing. You have to do your research, your coding, your backtesting, optimizing, paper trading, live trading, and monitoring. And it actually doesn't end there. The monitoring will help you to check to see whether your algo is working well or not. If there's any problems or any features, you go back again and you do iterate on and on. This never stops. Although algo trading says that it's automated and you can sleep well at night. Yes, you sleep much better. Yeah. And it is very true because why we use algo trading? Yes, first and most, it removes human error. Because one moment we think that, oh, this will go up to $10, but actually it went up to 12, and then you lost. And you thought you would go up to 10, but you went down to 9 and you lost $1. So either way, you are not accurate because we are human. And capitalize on rare and special events. We can rarely know what, because investing are actually very quantitative. There are patterns that are very predictable, although not 100%, but we are trying to predict as much as possible. If, like, for example, Sachin shared that if we can get 90% of sure win, why not? I'll take the 9, or the other way around. So, and if you have another strategy, you have things that you like the tech stocks better, so you can help you invest much more better if you have a strategy already, because it helps you automate, and the maintenance is low. So when we talk about algo trading, actually this doesn't cost you much. Quant Connect was a very good platform introduced by FinTech Lab and Sachin. It actually costs you about $30 to start live trading. Very cheap, a month. Okay, so, and then this algorithm allows you to do a lot of very extensive backtests. If you do it manually, one day maybe you can do 1 year, 2-year backtest on 2 or 3 stocks. But on Quant Connect, the platform and the framework gives you access to a few terabytes of data that you backtest very quickly. And then, of course, the speed of execution. Because once you have a strategy, you can start it and automate it very quickly. And then once you start, you don't have to worry about it for a while. And the main problem, algorithmic trading is all 100% mechanical. It watches the market for you. It has the ability of the extensive backtest that I mentioned. And its approach is consistent. If you want to just focus on one area, focus on a certain indicator, you will continuously do it. You won't forget, you won't change your mind, as long as it's good, of course, because trading is as good as the code. And for the discretionary trader, which I formerly was one, it's always every trade was emotion. Every trade, whether small or big, and it's time constrained in a monster. Because I like to trade the US stocks because it's very liquid. But then I got to stay up at night, and then sometimes I forgot, and then boom, it collapsed. So, and when we're discretionary trader, you can do back test, but very, very little, and there's no way of doing any extensive one. And by nature, we are inconsistent. One day I think the tech is good, another day I think that the financial are good, blah blah blah. And then trading is as good as me. I'm not good. That's why now I'm empowered with the algo trading from Quant Connect. And let me just show you what Quant Connect does. Is if you don't, you can just go to the website quantconnect.com. Right? it has tutorials, it has videos, it has a huge library of APIs and strategies and indicators can help almost everyone. For me, I'm a non-coder, but I still managed to get some pretty good results from it. And with this, I would also like to share with you that I am hoping to commercialize and empower more people to invest early. It's never too late. I'm late. I'm late into investment. Try to form a nest egg, and then I hope that people start now, not tomorrow. Tomorrow may be too late. So my view trader objectives and services are basically to provide private portfolio, mutual funds, closed-end funds, and NFTs. And this, I intend to market it up to ASEAN, because basically ASEAN is a very uninvested and underinvested market. People, I don't have the numbers, but it must be huge. So this is where, from what I learned from FinTech Lab on this algo trading, this is my intention to start to commercialize this idea and empower non-investors with algo trading. Because the algo trading is now non-emotional, and of course is actually not 100%. There are times when the algo trading loses money. However, the optimization will help you to see the whole process, and you understand when and which one makes money. Of course, the dips you see that it doesn't work, but on a whole, it helps you visualize that your algorithm can be good. So this is the advantage of this Quant Connect platform as well. It gives you a very visualized and many tools to help you to optimize and do back testing very quickly. Just to introduce to you what my commercial plans are. One way, because ASEAN is a huge market with almost 600 million people, and many people are underinvested or uninvested. First, they don't have the time or money. So one of the idea is creating my investment fund NFT, which has a market for people. So this is just an idea, which I hope that I can go through. So yes, this is all why I'm introducing this, because these are based on the algorithm trading system. Not that I want to encourage everybody to invest, but if you want to invest, you invest in a more safer instrument or method. So this is just an idea of mine, which is I hope to commercialize. So okay, thanks. Hope that I have explained sufficiently. Back to you, Soshan.
Okay, thank you, Chaiju. So this was just a demo. You see how Quant Connect. So this in front of you is how Quant Connect gives you. You can code in there, you can test, back test, and these are the results. And based off that, Chaiju made his own website and strategies to deal with it, right? So I hope you guys got a good understanding of investing and what algo trading is about to start off your journey. Thank you for attending. Back to you, Prof. Keith.
Thank you so much, Shashank and Chaiju. Wonderful, wonderful. Let's give them a round of applause for the presentation this morning. And perhaps, Chaiju, you could stop sharing there for a second. And let's open it up for questions. We have a couple of minutes here. just a couple minutes. We can take maybe 1 or 2 questions at the most. Anyone want to verbalize a question here? And you're welcome also to turn your screens on as well if you'd like to ask a question.
Alex, you have a question, right? Alex has a question. How is algo trading different from DCA into SPY in the last 5 to 6 years compared to the one on the chart shown just now?
See, algo trading is nothing but it is the strategies which comes to you. You are just making it algorithm for it. It is not something you are doing new, unless you are into high frequency trading where your strategies are different. Here, if I have to trade on the same strategy, right, like moving average crossover or like any other strategies, but what I'm doing is to remove the emotions, to remove my biases. I have made it a plan that I will only enter at this, I will only exit at this, and then I do. Remember, algo trading, if you have your idea is wrong, it will do nothing, but it will speed up your losses, right? So algo trading is about making it automated. It is not different than anything else, right? So I hope that is the point. Algo trading, high frequency, yes, there is high frequency trading is algorithmic. It is a type of algo trading, but there the idea is different. There you rely on some other strategies. You try to be execution. There should be fast execution and speed is the key. But it is algorithmic, but the strategies are different. That makes high frequency trading. Okay.
Thank you, Shashank. And there's one more question here. Chaiju answered it actually. He made, but Tak Hong and Chaiju, you guys want to discuss for a moment your question?
Okay, so let me share. Tak Hong asks, is there a difference between algo trading and high frequency? Yes, there actually is, and yes and no. So algo trading for in a quant connect is actually not high frequency trading because the servers are not that quick, and then they need a lot of computing power and investments to invest on the server that is super fast. And we are not talking about high frequency. Algo trading is basically to automate your strategies, whether you want to invest $1,000 or 10,000 or a million. It helps you to trade without you need to monitor all the time, full time. But then again, you have to backtest your strategy before you go live trading, which as you heard that Sachin has emphasized on, you must be sure. And then there is still risk. There is nothing is guaranteed. It's just that it helps you pick up when you are not noticing. When you are worried, you have a backstop. So it helps you automate and decide for you without too much of your emotions hampering your decision.
All right. This is great. We've got, so Takahong talked about that, and then NFTs. Can only one person buy an NFT as the fund? Chaiju, you want to share about your NFT linkage?
Yeah, sure. Okay, now this is just an idea, this concept, but actually it's not new. This has been tried before, but of course, how much an NFT, a fund or investment NFT can make money, that is besides the point. So ours, because we are dealing with algo trading, our so-called structures are usually better returns than a benchmark, which is usually let's say in the US is the SPY, the S&P 500. Algo trading, if you do it diligently, it can beat the benchmark easily, hands down. So if somebody who wants to invest, let's say you don't have big money or don't have the coding experience or the time, that's why I created the idea of this NFT so they can invest in small quantum, so the NFT will come in $1,000 pieces or 10,000. So once you buy, there will be a few kind of NFT that I can suggest. One could be a fixed income. One could be a fund linked, and another one could be a high risk and may have some possible losses. So this is so far an idea, but I think it's workable.
Awesome. Well, thank you so much, Shankar and Chaiju. This is great. I've put their LinkedIns into the chat room here, so you can, by all means, keep in touch with them. Guys, Shankar, Shashank and Chaiju, can you guys, are you okay with them linking together with you and asking questions, following up?
Yes, definitely.
Sure.
I understand this was a small talk. So if you have any questions, please connect with us, FinTech Lab, our profile. We are happy to share or answer your queries.
That's right. And there's even questions about backtesting results and everything else. I'm sure you can follow up with Chaiju on that as well. And Shashank will show you all about interpreting them. Hey, everyone. Also, this has been part of our NUS FinTech SG program. I put a link there. We have an information session this coming Friday from 3 to 4:30 p.m. And we'll be talking more about what that's all about. And you'll get to meet up with Shashank at some point in your classes as well if you take that, or be trading like.
This is relevant.